Hi guys, and welcome to today's video. Today we are going to walk you through the steps you need to take to get started investing in the stock market. Quickly, before we get started, it would be great if you guys could like and subscribe. It helps us bring you more content for free. So let's help you get started in the stock market. Why should you invest in the stock market? The main reason many people do is passive income. Passive income isn't like a job because it requires less ongoing effort to maintain. The stock market can generate passive income for you, like when your stocks go up in value over time following your initial investment. Many people think you need large sums of money to invest in the stock market, but this just isn't true. In recent years, many online platforms and applications for purchasing stocks have become available, and members of the public can practice with a test account or use small amounts of money to start purchasing a piece of a business. We will provide some examples of these later. Types of stock market investments. There are many types of stock market investments, but let's break down some of the key ones for you. Individual businesses are a frequently traded investment. You are ultimately an owner of a piece of a business if you buy their stock. You can own a piece of some of the largest organizations in the world, such as Microsoft, Apple, or Samsung. Exchange-traded funds. Exchange-traded funds, or ETFs for short, can be a group of individual businesses bundled together to make up one basket and you buy that basket. One of the main benefits of ETFs is their diversification. This can reduce the risk of investing in a single stock. Real estate investment trusts. These are companies that own or finance income-producing real estate. This can be commercial property or individual homes. Dividend stocks. Dividend stocks are from businesses that pay their shareholders a quarterly or annual dividend or an amount of money. Dividend stocks can be an effective way of producing passive income with the proper amount of investment. Stock market terminology. Understanding some of these terms will make it easier for you when choosing your stocks. Bull market. When prices of stocks are increasing and investors see a positive market. Bear market, when prices are decreasing and investors see a market that is looking like it will reduce. P/E ratio. The price-earnings ratio is the ratio of a company's share price relative to its earnings per share. Investors use the P/E ratio to compare the performance of two companies or industries and to see which sectors are over or underpriced. Market capitalization. Market capitalization, or market cap, is the total dollar value of all the shares of a company's stock. For example, if a company's share price was $1 and they had issued 1 million shares, their market cap is 1 million. Now you understand some of the basics, you are ready to move on to the next stage. Let's look at some of the key steps that you need to take next. Step 1. Decide a strategy. You firstly need to decide what strategy you are going to take. Are you going to be a short-term investor, for example, to own stocks for a period of 1 to 2 years? Or will you be a more long-term investor who will purchase stocks or ETFs and keep those assets over long periods such as 10 to 20 years? Will you be a value investor? So value investors are individuals or companies that will buy a stake in a company at a time when the price of that stock is favorable. The value investor will see the price of that stock increasing over time, and they will see that the company has good fundamentals and a solid balance sheet history. One of the most famous names in the value investing area is Warren Buffett. Swing trading. Individuals who swing trade will buy stocks, but only hold them for a short period of time, sometimes days or even weeks, or a few short months. Buy and hold. Buy and hold is a strategy that many apply regardless to market conditions. They will purchase a piece of a company, such as Microsoft or Apple, and they will hold those stocks over a long period of time. They won't sell when the price reduces slightly. They will continue to buy the stock or continue to hold the stock for a longer period with a view that the stock will continue to grow over time. Contrarian investing. Contrarian investors tend to go against the way that the market is moving at a specific time. These investors will assume a larger amount of risk, and they can purchase stocks that are reducing significantly in value or have already reduced in value. Step 2. Choose a platform. Now you are really getting started, and it's time for you to choose a platform for you to make your first purchase of a stock. Popular platforms in the US are Robinhood and, in the UK, you can use Trading 212. Many platforms offer you the option to purchase fractional shares. So for example, if an organization sells a share for $200, you don't have to pay $200 to purchase a piece of that company. You can buy a fraction of that company, and you can buy $5 worth of shares. When looking at any platforms to purchase shares from it, it is important to focus on is any charges that apply for you purchasing stocks. It's also important to use a reputable platform. Step 3. Pick your stocks. Now it's time for the most exciting part of all and the most nerve-wracking. Selecting your stock or stocks. When analyzing a stock, there are two key types of analysis, and these are fundamental and technical analysis. No amount of analysis is ever going to guarantee a stock price will increase. However, it will increase your chances of being successful if you carry out the proper due diligence and analysis prior to investing in any stock. Fundamental analysis looks at key areas of a business. This includes balance sheets, income statements, PE ratios, as we discussed earlier, cash flow statements, and details around the management team who run that organization. Warren Buffett has famously talked about companies he likes have a moat. A moat in stock terms is when a company is well established in their market and people buy into the brand. Coca-Cola is a great example here. Many people, when drinking Coke, will buy a Coca-Cola. That is one of the reasons it has had the market share it has in the soft drinks sector for many years. A disclaimer, you have to choose the right stocks based on your situation, and this isn't financial advice, and your capital is always at risk with any investment. Technical analysis looks at how a stock is trading and the charts which illustrates price fluctuations. These will help you identify the changes in the price of the stock and how it is moving at any given time. And it is important to look at the price fluctuations historically prior to purchasing shares, and how the price has moved based on different market conditions and profitability history of the company. Step 4. Managing your portfolio. Once you have made a purchase of a stock or a group of stocks, it's important to apply proper ongoing management of your portfolio of stocks. Staying updated on current events economically will help you understand market changes and buyer sentiment. This is specifically important for the industries or markets such as China or Europe that your businesses may serve, and will help you to identify any particular reasons why there may be a change in the price of your stock. It's important to note when choosing stocks that large news outlets can be beneficial, but only when used to your advantage. Regularly looking at news and price fluctuations can cause the investor to make incorrect decisions based on something that will only have a short-term effect. This is where your strategy can be of impact. For example, if you are a short-term investor, news can make more of an impact to you. It's also important to keep up to date with quarterly or annual earnings calls. On these calls, information is shared directly by the individuals who lead the business, and they will provide updates on strategic objectives, and information will be shared, which discusses performance of the business, and also includes financial performance updates, such as updated balance sheets, annual reports, and profit and loss information, all of which can, in many instances, have a significant impact on the share price and future outlook of an organization. Today, we have discussed some of the key areas of the stock market and provided help to get you started. There are some books we have found useful, such as The Intelligent Investor by Benjamin Graham, to help you along the way. Yahoo Finance can also be a useful website to analyze stocks and obtain up-to-date information on prices and economic updates. We look forward to any comments you want to add in the comments section below, and please don't forget to like and subscribe. See you guys next time, and don't forget to check out some of our other videos to help you on your wealth journey.